Hi guys, right. This is task 7. So Jamal's asked for task 7, part 2. But just quickly looking at part 1. Um, now this is Allison. This is about this lady called Allison who is a sole trader. I mean, I know she's a sole trader because it doesn't tell me it's a limited company. So that's the clue. If it was a limited company, it would say so. Right. So as soon as I know that I'm dealing with whether or not Allison, I know straight away that the rules that apply to Allison are to do with the 6th of April to the 5th of April. I know that that's the situation here, right? If you like, that's the situation. And I also know that I'm dealing with this idea of a payment, an account. And I know the payment and accounts are to do with the 31st of January, 31st of July, and the balancing payment the following 31st of January, right? So payment and accounts, that's the payment and account structure for sole traders. Now, I know the payment and account structure for companies are you just find whatever the year end is of that company. FA laws, FA Finance Act of whatever 2016 would just apply to that company in that year, but it doesn't fall into any kind of basis structure or anything along those lines. You just work out, if you remember, it was month 7, month 10, month 13, and month 16 on account for companies. But this is for sole traders, right, and businesses, sole trader businesses, if you like. So the rule is, perfect, I can get a different pen color here. Now, we know, one second, let me just change my pen color, right. So I know, right, that it says to us here that, let's go and look at her accounts. Let's go and look at what it says. It says that that we're dealing with. Let's go and look at the situation that we're dealing with, and then go from there. It's quite important. It says so. Allison has been too busy to work out her tax return and knows she will file her 2016-17 tax return after the filing date. Okay, great. So we know the filing date is the 31st of January. Yes. So here's the thing, 2016, 2017. Let me go back to my slides. 2016, 2017. What we're talking about here is this 2016 to the 5th of April 2017. This is the year we're dealing with, right? So it doesn't, if you remember with the whole basis points, she could have been preparing accounts up till the 31st. She might have gone 1st of January. I'm just going to suppose 1st of January 2016 to the 31st of December 2000. But the whole basis point story is that you prepare, this is her year end. Can I find a year end that's ending in the tax? So we've been doing this. This has been happening for many years. So this is her year end of her business, but it falls in the tax year 16-17, doesn't it? Of course it does, because that's her year end. Now, here's the thing. She will pay taxes on this. Use this as a learning tool as well. She will pay taxes on this, right? She will pay taxes on the profits for this period of account that she's done. It could have been I don't know, the key point, it could have been anything. It could have been the 1st of February to the 31st of January 2017. It's irrelevant. What she will do is she will pay taxes, right? If you remember that she will pay taxes in terms of this tax year, then she will pay taxes, if you like. The first tax she will pay will be on the 31st of January 2017, before the year end. The next tax she will pay will be the 31st of July 2017, and she will make a balancing payment on the 31st of January 2018, right? This is her period of account. It ends in this tax year. The government wants to start seeing some evidence of their money for that early. Oops, sorry. Just keep this. The government wants to see evidence of their money for this. So this is the way to think about this, right? So you're not confused. Now the question goes on to tell us that so far she expects to pay 12 grand, right? But so far she's paid 5,000. It says that by the 31st of December 2017 she would have paid 5 grand. So it means that by this point, there's still 7 grand outstanding. That's the first point to this, right? 7 grand outstanding. Okay, great. So let's go back to the question now and see what they are telling us that's helpful. So we're told that she's paid, so she has 7 grand outstanding. So it says, let's focus on, I'm just doing this, I'm just looking at this. It says, let's look at the filing. So I expect her to have paid, if you like, and filed by the 31st of January. So let's focus on, the first question is really about filing. So let's focus on filing. So it says here that she wants to file, she's going to file on the 28th of February. She could file on the 20th of February. We know straight away, right, that once you miss the 31st of December, sorry, 31st of January 2008, you're subject to straight away a straight penalty of £100. There's no escape. That's going to happen. But because it's still within a month or within 3 months, there is no daily penalty. So she suffers this. Let's just go here. She suffers this for, I mean, we have some evidence here to guide us. If you've done this, I think you said you've done this, but if you've done this, let's just look at the evidence, that what the guidance is. Right. So here's the guidance, if you like. So it says that penalty, miss the filing deadline, £100. So 3 months late, then we have a daily penalty of £10 per day for up to 90 days. So what are we saying? We're saying here that, let's just go back up here. So let's just say here, so we have the 31st of January 2018. She's missed the deadline, so straight away there's a £100 penalty. So we have 31st of January, then we have February, March, end of March, and end of February, end of March, end of April takes us to 3 months. So we have 3 months that she had time to still pay this, to still file, and she would only have suffered a penalty of £100. But once we go past April, she starts to get a £10 penalty every day. Yes. Now, the question tells you that what if she files on the 31st of May? Well, if she files on the 30th of May, she'd have been paying £10 for 31 days, which will take us to £310. That's the scenario there, right? So you can see. Oops, sorry. Just going back here. 3 months. She pays £100 as soon as she misses the deadline. 3 months of grace. Pay your £100 and file. But if you don't, once you get past the 30th of April, you will pay £10 a day for every day, if you like, for up to 3 months. So let's see. Let's just go back to the question, because it's good to sort of see how this is, making sure you're looking at the question as I'm going through this. So you can see here that right now there's no daily penalty, but here if she pays on the 31st of May, if that was a scenario, she would have paid the fixed penalty, of course, and then she would have paid the 310, if you like, for the 30 days in May. If we go to August, well, definitely would have paid the fixed penalty. Now the question about the daily penalty is it up to 3 months, technically 6 months post the very original point, but is it 3 months, if you like? So what I mean by that is, here we are. So we have 31st of May, 30th of June, and 30th of July. So technically this is 6 months up to this point, but really it's 3 months of daily penalties. And it says she pays in August, so she will suffer the full 3 months daily penalty, which tells us that the maximum allowed is £900. So we know we will definitely experience a £900 charge over here in terms of the daily penalty. Now the question is, what about any interest? And let's just go back again to our guide. And if we go back to our guide, it tells us clearly that late, in terms of penalties, 6 months late penalties, 6 months late, 5% of tax outstanding at that date. So what was outstanding at that date was, it says she's made £5,000 towards this thing. It tells us that there is still, if you like, she expects it to be 12, so there's 7,000 outstanding. So that's how we worked it out. So £7,000, I think, times 5% gives us £350. Right. Great. So that's the scenario here. That's the first bit. Now let's look at the next. So sorry, I'm just going to chuck that 350 in there. So here, in terms of daily penalties, we would see a penalty of an interest penalty, 5% interest penalty on outstanding tax of 350. Cool, great. So let's look at the next. Let's look at the next question. So now this is an interest. It says she expects to pay the remaining by the 31st of August. She should have paid this by the 31st of January 2018. Right? She should have paid by the 31st of January 2018. Now she's thinking she might pay 31st of August 2018 or 31st of March 2019, which is actually a whole year and 2 months afterwards. Yes, Mal, that was your question. So if I come here and write here, so what we have here is, this is when she should have paid, 31st of January 2018. So they're telling us that she could pay 31st of August 2018. Oops, sorry. Or she could even pay even later, 31st of March. March 2019. So let's see what the rules guide us, how the rules guide us for this, if in case in terms of, you don't have to remember all of this. But where are we? Here we are. So we are here, payments and admin. So let's look at what we have here. In terms of late payment, so the deadline was the 31st of January. So it says late payment, 30 days late, she pays 5% of tax outstanding at that date. So she's 30 days late, or she's 30 days late already, because it says here that she pays this in August, right? So I can actually write on here. That's brilliant. So she pays this. Oops. Sorry. 1 second. She pays this on the 31st of August. She could pay this on the 31st of August. If she does it on the 31st of August, then it means that, first of all, she's already 30 days late. Right? So because she's 30 days late, there's already 5% to pay on the 7,000 outstanding, which is equal to 350. Now, I think the question goes on to say that if she's 6 months late, there's another 5% outstanding at that date. So let's have a look. So we have January, we have February, March, April, May, June. So 1 month, end of February, end of March, end of April, end of May, end of June, end of July. That's 6 months. So she pays 31st of August. So that's another 5% times the 7,000, which is equal to 350, which is why you have, by this time, she would have ended up having to pay £700. And then it says that if she's 12 months late, we have another 5% outstanding at that date. So by the 31st of, by the 31st of January again, 2019, that would have been 12 months. So she's 12 months late again, so you have another 5% on the 7,000, which is another 350, which would make that 350 plus 350 plus 350, which is 1050. So that's how you arrive at that. Yes, payment, you can see the rules are different, so those are where the rules apply. Look at in terms of filing, I mean, the filing date and the payment date is the same, but in terms of the rules as to when you pay, you can see you have that happening. Okay, great. I hope that's been helpful, and I'll do the next question.